Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for gold, silver, and platinum, being recorded on Sunday, November the 9th at 10:25 a.m. Pacific Standard Time. I'm here on the gold futures. I'm on my maximum monthly chart, and just to kind of show the overview of the pattern that I'm counting and the degree. So within gold, I don't necessarily track above the primary degree. I did have cycle degree showing previously and basically would still be in place as cycle one, cycle two, and which would suggest that we're in a cycle third wave going up. So the reason why I took it down is because that cycle third wave would be, we're still in primary wave three, which already goes up to 5,000, and that would be a fourth wave coming down and then a fifth wave coming back up, would put gold higher than I would expect. Not that that's not impossible, because it certainly is possible, but right now, not really effective in determining a more of a near-term to mid-term picture. So I'm going to keep it here on a primary degree. We're in a primary degree five-wave sequence higher, of which we have primary 1 and 2 in place, and that puts us in primary wave 3. Now, inside primary wave 3, there are going to be 5 waves of intermediate degree, again, which 1 and 2 are complete. And that puts us in intermediate wave 3 of primary wave 3. Well, then we started into that intermediate third, and that's going to consist of 5 waves of minor degree, of which 1, 2, and 3 are now complete. And that was the big change that I made last week, possibly the week before. And that's where I went down and I moved up a degree to this minor degree, because I was working it as a minute degree, 5 waves up. And that just kind of kept pushing. And so I revised the count, bringing the minor third here. And so now that puts us in a minor fourth wave. And this is after we reached 4,392, so almost 4,400. And that would have been back on the 13th of October. So since that period, since that high, I should say, the market has been involved in putting in a minor fourth wave correction. Our initial fib indications or fib levels suggest that the support for that fourth wave comes in at 37.42 and then 33.35. And so tracking as it comes down. And so we're going to just keep bringing this in. This is my weekly. Now let's go to the 3-year, and now we can get into all the insides into this third wave, which kind of goes all the way up. But now I want to get in and want to start taking a look at what is the market doing now. And so let's bring it down to the daily. Here on the daily chart, I know the fibs in there are kind of probably blocking some of the view, but I still believe that all we have completed thus far is the minute wave A of minor wave 4. So that we're still within minute wave B of minor wave 4. So the B wave is an upward bias or an upward move. And so far, it's also going to come out in an A, B, and a C. So taking it off the daily, let's bring it down to this. And now we can get inside this fourth wave. So again, there's the third, we're inside the fourth. Here's minute wave A of minor 4. And then this is where it gets a little bit tricky, because there's wave A, then A, B, C for wave B. So a little bit of an irregular already tossed in, and then we get the B wave. And from what I can tell, we are 1, 2, and then 1, 2, and then hopefully this isn't just an anomaly, but we actually will just continue to move higher. So where can all of this end up? And again, just the B wave with still a C wave coming down. So there's a little bit of a change because we had the potential where, let me just change this one little bit because I am a perfectionist and it does change our levels slightly. So working this down, I had initially been talking about that 4,000 was going to be a pretty solid support, or could have been. And we dipped below it, which is fine. We continue to have that downside support, 0.236 for the whole minor fourth at 37.42, which I believe is now going to come into play. And with still possibilities as well of 3,300, 33.35 all the way down. And that's not actually going to be determined or signal that any further rally is off the table. I just think it is consolidation. It's a correction, and there's still going to be another stronger leg up in terms of it's going to be a minor fifth wave. And that minor fifth wave will then complete the intermediate third wave. And we go through another fourth wave. So we've got a lot of those coming up as we build up to the top of the primary third wave. So again, just in keeping in terms of, if we go back to that large picture, there's still quite a bit of upside left in gold. And initially, most analysts are saying, yes, gold should get to $5,000 an ounce. And I believe that's still in the works. Probably not this year, obviously, but I think in 2026, how long it takes to get there, what's going to be behind it. There are many, many different factors. And one of them will be, of course, I think just the fact that gold will continue to retain the status of being a storehouse of value. So as things get really sketchy in global economies, particularly the one here in the United States, when we get into a little bit global economic uncertainty, the first thing that many traders do, or many people do, is they put the money into bonds. They put the money into the 30-year bond, the 10-year note, for stability. And I think that that's going to wear thin again, and eventually shift that responsibility, because it's now actually also being shared by, we have the bond market, we have cryptos, and then we have gold. And somehow gold's from being number one to possibly being number three, because we're seeing a lot of movement in Bitcoin, and they're saying that that's because it's a storehouse of value, that in times of trouble, people will be turning to Bitcoin for safety. I'm like, okay, I don't necessarily see it, but that doesn't mean it's not happening. So I believe that gold will retain its status as a storehouse of value. In other words, it's like if you're putting money in that, and when we talk about storehouse of value or storehouse, what it really is suggesting is that when the dollar loses value, of course, gold's going to come down. The price of gold will come down because it's traded in dollars. So that will happen. But at the same time, other things will occur. But the fact is that when it comes right down to it, what we're going to have to do is like you may not have any assets to which you can barter, where you can trade, where you can convert things over and start paying for things. And that's what I mean about gold being a storehouse of value. It will always have value against other things which might be worthless. And that's talking about something that I don't think I'm going to see in my lifetime. And that is an utter dive lower, as we saw in 1929 to 1932, that just kind of broke and then went into a Great Depression. And that depression lasted up until pretty much to the Second World War. So again, that type of a situation is where gold will be a storehouse of value. And it won't be worth $4,000, $5,000, $6,000. I mean, actually, I shouldn't say that, but my thought would be that it wouldn't be worth that much. Again, it could be worth $500 an ounce, but still, when it all comes down to that, it will still be a storehouse of value, and you still be able to barter for goods And so there's a friend of mine, some of you may have read his reports. His name is Dan Ascani, and that he has written reports on gold in a deflationary economy. And so that's where this whole storehouse of value comes in. And the analogy that he uses is what it costs to buy a suit. Let's go to 2025. What it costs to buy a man's suit, a decent suit. You're going to be somewhere around $2,500, $3,500 or some very, very expensive suits that are tailored, that are made, et cetera, et cetera. So, but in terms of then, now we're going to go out to where the economy kind of collapses, the dollar falls to lows, things lose value, and now you've got that same chunk of gold. And would gold be priced enough to buy a suit? So in other words, right now, gold is priced at $4,000, $4,007 an ounce in the futures market. I mean, the cash is probably, maybe $39.95, $39.90, whatever the markdown is. I don't know. But could that buy a suit? Yes, it can. So as the storehouse, as that value goes down, then we're equating it to what will it buy. So you can talk about, the commodities. You can talk about, homes. You can talk about other different things. And so that's where the gold being a storehouse of value comes into play. Now, whether we can say the same thing about Bitcoin or other cryptocurrencies, I don't think so, but people do. Can we say the same thing about the bond markets? Is there safety in putting your money in the hands of the government or in the treasury and getting a 30-year bond in return, which has a coupon, granted, and so would likely continue to be paid, but that's just under the guise of that the good faith and credit of the United States will continue to be what it is. So there's a lot of givens that kind of go in there to determining what really will be that storehouse of value, which is why I think gold will be the winner. In the meantime, what are we doing here, and how are we going to get there? I think that we've come down in an A wave, so I'm looking for a C wave up. Our markers to the upside are 4,078 to 4,091. And then we break and we get to 4,050 to 4,070. And this is the more likely because a B wave normally comes within 50 to 62%. Now, granted, this was an ABC down, which gives us the potential that the market could go even higher, get closer to that all-time high to put in the B wave, right? Because if it's 3 waves down, we're now working that this is a flat, an ABC flat. So technically, right off the bat, we're probably looking for 618, which is 4,200. So we have 4,170 to 4,200. This actually is the second cluster, resistance cluster to finish the B wave. So what does that then suggest as well is that we have another down leg to come. And therefore, 3,700 remains in that picture with the potential and the possibility that 35 will come into the picture. And can't tell just yet. But what I can say is that once we get up to wherever this is and we get that B wave put in, we have 5 legs. We have a 5-wave sequence coming down before wave C would be put in place. And that's where damage can be done in the price. And so I'm saying now that there's a slight adjustment because we had run the possibility that we had an ABC down and I could put the wave 4 there and we would just start to go. But that's not happening. You can see we're still consolidating, we're trading in a fairly tight range. Yes, it's $200 or $300, but it's still a tight range considering how far gold has gone up. So coming down, we've come off about 500 from 40, almost 44 to 39. So it's come off about $500. And so to recover 250 would bring us back to 41 to 42. So that it all fits perfectly in terms of how far that bounce should come up in a recovery, and then before we get a C wave. And if that C wave is going to be an additional, 400, then we're looking at 38 initially. Anything larger starts to push us below that. So depending on where we end up, and if the market can hold still to just that C equals A type of a factor, then from here, let's just kind of show you, let's just kind of go. Let's do it this way, because then we can see the actual numbers. And let's just say we get up to 4,200. Nope. Yeah. But we're going in the wrong direction. Okay, so I'm going to go, I'm not. Hold on. I can do it differently. I had the wrong up there, and I'm now working in the right one. So I go here to here to here. So you can see 3,700, where C would equal A. So that keeps that higher level, 0.236, well in line. Now, 1.618 takes us down. So the C wave, right? Here are the most common. C equals A, that's down here. C equals 1.618 of A, that's down here. C equals 0.618 of A, that's the third most common, that's way up here. So still brings it down, does produce a slight new low below A, but whatever's going on outside of all of this would provide enough support because the market really wants to rally. So getting down here, we could get a V bottom and kind of go. But all those are valid. And that's if it gets up to there. The adjustments would be made if we only get up to here. And we have a little bit more downside. And you can do simple things such as we're going to activate this guy and we're going to bring it down. Let's say we bring it down to here, to this level, 4,090. Well, there you can see it. 100% is 35, so we're below the 37, and 1.618 is below 3,300. So you can see how that difference will show up if we only get up to if this C wave only gets up to 4,100, or does it get up to 4,200? So we have a lot of different choices or levels that can come into play, but we'll work that once we get to that end. So you can see how the ABC can get to here or closer to here. And so that's why those are going to remain important for when we're done with the B wave and we start coming down in the C wave. And that's really about it about gold. So we're still consolidating. So there's nothing really to do here. It's even more difficult, I think, sometimes even to day trade gold right now, because it was seem that the markets are a little bit thin and they move really fast. And somehow even if you watch just on a day trading basis, you're looking at gold, it could be trading at 4,007, and then suddenly the 4,008 bid, 4,850, 4,009, and without any trades happening. And then they walk away, they run away, and now suddenly they're lower, lower, lower. So I'm watching that happen often during the day as well. So again, a little bit more of a difficult market, sometimes even difficult to trade. If you are in a long position and you got long up into this area, you have to make a determination, and you're just trading the futures to catch the rally. You get to make some choices here, because I do not believe that the fourth wave is done, leaving open that fifth wave, and if it is, it's not acting like it. If it is done, then we'd be looking for this to be start producing stronger legs up. And I can't even say that this could be one and this could be two. And if it could, but what it needs to happen, if it is, we've entered into a third, and we need to go without looking back. Okay, that's if indeed this is one and this is two with an irregular, this is two, and then we need to get this thing going, and I mean going. It's a third wave, and if we did just fibs going this way, you're going to see it needs to get up to 41, 42 pretty quickly, very quickly, to be honest with you. So we'll see. We definitely will see. That's really about it. kind of just sitting around. It does still get influenced by the dollar. Dollar's now back closer to 100, but there's still a lot to be said that the dollar is likely to move lower, which should support a rally in gold. All right, let's go over and take a look at silver, which is also not necessarily presenting a difficult picture, but just one where it's like, I wonder really if that fourth wave is over. I had previously marked it as such here, and now I've kind of taken it back in that I believe we have a 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 for wave A. So wave A ends up being 5 waves down. And so I'm like, okay, that can be a little disconcerting. So it made me revisit the Elliott. I initially had given the potential that wave 4 was here and that we were going to start to rally. And now I'm kind of not necessarily backing out of that, just showing something a little bit different. And that little bit different is that it's still within an ABC. So this is the B wave going up. And this could be A and this could be B. And we're still having a little bit, we have what looks like impulse type moves and up here as well. And then we did this great spike and then we came all the way back down. And that spike would have been on Friday. And we opened at 48, ran up to 48.67 and came back to 48 and then proceeded to go down from there and then rallied back again. So difficult picture in terms of gold, in terms of silver, actually breaking below 45. So if I bring this back out, let's put it up on the daily and we can see what we have. So again, what we're doing is a minute fourth wave correction. And so a little bit different of a count here in silver. And we can go back out here. Silver is still in this larger primary degree, WXY. Now, what it can come next is a Z, an X wave followed by a Z wave. So several different things, right? Because if I'm looking for the Y wave to peak out, which it already has kind of, but it has pushed to new all-time highs in silver. Again, that's basically over the 1980 high. That's how far back the previous all-time high went, to 1980. This got close, but it didn't break to a new high. Now we did. And we took it by a fair amount, with that high being at 53.76. So I do believe that we still have additional upside to finish, obviously by the count, but here as well, I've kind of shifted things around to where, again, we're back to being in that fifth wave. And again, in the metals, particularly gold and silver, fifth waves are the waves that extend and explode in direction. And that certainly is the case here, where we saw basically from 36 up to 53. And granted, this is a weekly chart. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So basically 2 months and a week it took to get from 36 to 53. And it was very powerful, and it was a very, very strong rally. And now we're just correcting off of that rally, but continuing to hold above 45. Now, if I bring this down, and I'm just looking at here, even on the daily, you can see I got 1, 2, 3, 4, 5. And that's why I changed it. This is a possible, we had where I could have, let me see if I bring it down, bring it on this type of a chart. And we're just going to be looking at this here. So it's 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5, C. So instead of this 1, 2, 3, 4, 5, which it also can be, and you put the A down there. So it could still be an ABC down for A, or it can be 5 down for A, but I don't count it as an ABC any longer to consider that it could be the possible completion point. Now, I may pull that back in. It hasn't been totally disqualified, but what needs to happen on this hourly chart, if we've got a 1 and a 2, this doesn't look very strong, does it? So it kind of keeps this as a wave 2, a wave B, and so it's still corrective. So I'm just kind of keeping things, trying to keep them in line. But what I am looking for, if I just do my fibs from here to here, we have 382, which continues to hold it, although we touched it. We got slightly above it on the 30th, so last week. We got slightly above it, came back down to close below it, so it's not so bad. So we have still got that resistance at 48.65. That's like a little bit above it. Got to 48.66, came back down. So went up and touched it and withdrew. But above that, we have 49.63 and then 50.61. Now, these are markers for a B wave. So first one, 382. I think we can get above. We would definitely need to get above. And if this is going to be A of B, B of B, then we're kind of working on a very, very sloppy 5 waves. Excuse me. But again, considering that we might be dropping into a smaller 5th wave at some point, then we might get a surge higher. So again, I am looking over the very short term for silver to break back again up towards 50 to get a B wave in. Now I'm bringing that back out to the daily. So what we're looking at here it does look like 1, 2, 3, 4, 5 wave A, B, C, wave B. So if I've even got it down, that's what I believe. That's for that. I can do one more in here. And we're looking at right there. See, we come up, we got that 50 level kind of coming into play. And actually we can go all the way up to 52, but I'm not looking for that right now. So let's go back and remove that. So you can see we have A, B, and the C wave does get us back up towards the 0.618 level, bringing it back down to that hourly. That's a decent rally. That's a $2 rally up to 50.61. And that puts in the B wave, and then we get another C wave down. Again, taking it back to that daily. So we can see that our levels, 45, which is held very successfully. That's why I initially put 4 there until I've come back and really looked at the structure, and I thought that's 5 down. So that's an A, and this is not taking off. It's kind of also kind of a little bit of range bound in here. So that's an A, B, and a C coming up. We have just getting past 48.65, so it's incomplete. I definitely need it above 49. So our next level up could complete this little small internal B wave at 49.63, and then with the upper channel coming in at 50.61. Now, what does that do? It sets it up for a C wave down, which then I'd be looking for it to break 45 and get closer to 42.73, 43. And so that would put in the wave 4, and then we go back again in a minute wave 5 up to complete this 5th wave. And now get it. This is all this minor 5th wave, but it's got, once we get into the 5th of the 5th, we should. This was pretty strong. Don't get me wrong. The 3rd wave was very strong, but now the 5th wave would be the one that really extends accordingly. So going back out then to our weekly charts, what do we have above all of this? We have 57. We have 65. It's not going down. There you go. And we have 66. Now the minor 5th, right? What's next up for minor 5 is that the 4.236 level. So that means it's actually gone through 1.618, 2.618. So its next level is 66 for minor wave 5. And we've got some other stuff in the way, which I think once it goes through, it's just suggesting, yes, we're looking for anything on that primary degree would complete along with that minor if we started really going through all these levels. This is an intermediate degree. So it's intermediate wave C has also gone past the 1.618, which its next level is 2.618, which matches with the minor up here at 66. So we have a top side that has the potential of getting between 65 and 66, maybe 67. We have a little bit of overshoot. Do we have stuff above there? We do, but it's way above. And that would be on this minor degree. We're up at 90, right? Because of the way I have told you, I've kind of switched back to doing solid math with dealing with fib levels. So basically, how do we get these larger fib levels? We're just taking, everything's like 0.618. You multiply it. You have 1.618. You multiply again, 2.618. You multiply it again, and your next one is 4.236, not 3.618. So it's 4.236, and you multiply that one against each other, and then you get 6.854. And above that, believe it or not, I don't know if I even have it on there, is 11.089. And that's up at $130. So is the potential there? I don't know about potential, but the fibs, definitely you could work out fibs to get you up that high. And on the primary degree, yep, they fit. 1.1, 100%, 1.618, 2.618, those are multiples. So they work. It's up from that level that it would jump to 4.236, which is way, way, way up there. I don't think I even included it, and don't blame me. But here, you can see on intermediate degree, so intermediate wave C. And again, what are we looking at? We're looking at fifth waves. This is a C wave, so we're going to have 5 waves of minor degree. So we get into this minor, and it just gets explosive. I think 65 is in there. I think 65. But if it continues to just blow itself up for whatever reason, then yeah, that's the next cluster. 86 to 94. We have one more above it, but I mean, to me, I'd have to sit and go like, gee, what would really push the price of silver up to that level? And it would have to be that there just really wasn't any silver available. And it could be a seriously disastrous short squeeze. Because again, you have to understand this is a commodity and it has a limited supply because it's more difficult to get it up and out of the ground and refine it, right? You find it and they mine it, then they refine it, and then it goes to market. So, and right now, from what I understand, because the options in SLV trade very, very heavily, that silver has become difficult to borrow. So we're already seeing that we had some short covering of just the people actually had to sell out long positions so that they could take the profit and give that position over to somebody who needed it. So in other words, that short, the inability for clearing firms to cover a short. So in other words, when you short something and you get that money in, that your clearing firm is actually going to go out and have to borrow whatever it is. They got to borrow the silver. They have to borrow shares of Apple. They have to borrow whatever it is that you're shorting. They have to be able to borrow it. So they have to go to a long who's willing to lend it to you. And so that you could deliver it. If they get, and then there's a whole bunch involved with that. So we're going to go into it. But just understand that when there's a shortage, then there's restrictions. And so you're not going to be able to sell, you're not going to be able to short it. You can sell it if you own it, but it would be difficult to short it because the market can't borrow it. Okay, so with that in mind, it could add fuel to a short covering rally if that came about. And that is what could push this above all this. If we think it's difficult to borrow here at 53, what happens if we start really flying to the moon? Is it going to be even more impossible to borrow at 67? Is it or even higher? So if it's a serious enough short squeeze, is this possible? Yeah, it is actually. It would be disastrous. It would be massive amounts of money being lost and gained by others. So anyway, all very, very possible. So that's my weekly. I'm going to bring it back down. Well, we got to get back. Let's bring it back down to today. So again, here we are. A, looking for the B. I got. I think it goes. I think it gets above that because we need to get above there. So I think 49.63 to 50.62 could be. It would be levels as six, and that's 50% and 62% for the B wave. And then we come back down in a C wave, and this is again where I feel that the market has the ability to get below 45 and sink closer to 42.75 to 50% level. And then that's a clean setup to put in this minute wave 4 and set the stage for a very dynamic minute fifth wave of minor wave 5. So again, minor wave 5 finishing, minute wave 5 finishing. And then what comes above it is an intermediate wave C, also a finishing, to go one more step up. And what's it finishing on that primary level? Primary wave Y. So again, when we're looking at this back out on this maximum chart, you see the nature of it. So I think we pull back, and it's going to not really be as noticeable, and it just then just extends. It just goes parabolic again as the stem completes, Y completes. Then I think it's going to be a very destructive, similar to these type of a X wave coming back down, and before we then maybe do a Z wave, and then start another cycle. So we got more to do. And there's more upside to do. And the potential for reaching these much, much higher levels really does still exist. All right, let's go over and take a look at platinum. Platinum as well, not necessarily presenting a very difficult picture, but kind of still inside a corrective phase. So here on our monthly max, excuse me, I believe that we did finish this primary B wave going up. And that's at the recent high at 1770, and really was up there. And then we came down, and what I believe, let me just see what it looks like here. I believe it was 5. Let me come down to all the way to my daily. Let me look at it this way. Yeah, I got 1, 2, 3, 4, 5. 4 and then a 5, and then it rallied up through all that. So it is 5 down, and I probably should have, why is it there and not there? Probably because it's just the way that this lines itself up, because it is here. In terms of the fib. Now from that, I have an ABC up to put in minute wave A of minor wave 2. And then we had an ABC down, and that was recently on the 6th of November. We reached 1513, and we've kind of rallied off of that. Doesn't mean that it's going to, I'm expecting that it should continue. If we're in a C wave up, it should put in, that's the top of the B wave. It could be like 1 and then a 2. This has got to be figured out. Let me pull it into my hourly. Right. So there we have the C wave and the B wave. And so this is 1, ABC 2. So if it is in the third, it's 3 of C, and then we need to kind of keep moving. So this was kind of an interesting rally followed by an interesting decline. And I think that just fit in the end of wave 1 and the end of wave 2. We still might have a little bit more downside to put in. If we go, we can do this. You could throw up some fibs to there and realize that we did come down to 50%. And so that might be enough. If we're going to go up and come back down, we can come down to 1534 and still be considered a wave. This is wave 1 of C, wave 2 of C. It could be wave 2 of C down to here. Then we get another strong section, another strong rally. and platinum, and I believe that it should get us to about 1569. Now, what do we got up top then? Well, we have 618, and this is a C wave going up, and it's a 5-wave structure. 618, definitely 1605. And then we have on the minor degree for minor wave 2 at 1625. We have here, see that? Got the double. We have the minor degree 618, and we have the C wave where it's going to equal A at 1663. So 1660 to 1663 is where I think that all this rally can finish up. Now, platinum normally will move in the same vein as gold and silver, but it's also gone off by itself in both directions. So not that it's dependent on one or the other. It can move independently. So it can go up there while gold and silver might be doing something different, or it can come back down while gold and silver are doing something different. So keep that in mind if you are trading platinum. But I think what we have, these are going to be resting points. But on a minor degree, 50% could work. It's going to come in between that and 100. And most of the time, wave C equals wave A, and that's most common. And that's why I'm looking at that one up there. So if we can get there, could pause. Maybe it's just going to be wave 3. We've got 1, we got 2, wave 3, pause for 4, go back up on a 5 and end up here. Possibly. So again, that's kind of the look at the precious metals. They're continuing to consolidate and finish corrective phases. In platinum, it's a minor wave 2. In gold and silver, it is a 4th wave. This is a minor wave 2 going up. The others are 4th waves coming back down. And that's going to be it for the precious metals for this week. Our next update will be next week.